I'm joined today by Alicia Li, Product Strategist of Real Estate at PIMCO. Alicia is among the incredible investors sharing insights at the Fixed Income and Alternative Credit Investment Forum today. Welcome, Alicia. It's great to have you with us.
It's great to be here.
Alicia, what are the key trends currently shaping the commercial real estate market, and how do you see them evolving over the next few years?
Well, the commercial real estate markets are emerging from a multi-year correction where values have come down anywhere between 10 to 50%. But we're starting to see fundamentals stabilize, and we think that's going to lead to some attractive opportunities. But we're living in an uncertain macro environment. So as we think ahead, we think investors need to be concerned about how they think about resiliency in their portfolios, how they think about relative value. And to us, we take that very seriously into consideration, and we find just broadly a lot more attractive opportunities in debt today over equity.
Why is real estate debt a compelling opportunity for investors today?
I think if you think about lending, it makes you feel really comfortable as a lender to be lending to a market that has reset in values and where your lending bases are at all-time low. Now, if you add to that the fact that you also have an environment where your underwriting standards and your LTVs have come down, that just adds an increased amount of safety to your loan. So we think that's incredibly exciting. And on top of that, with the market starting to recover and with greater demand for debt, with more transactions against more loans expiring, we think that's all coming together to make real estate debt a really compelling opportunity today for clients.
How competitive is this market, and how is PIMCO positioning itself to capture opportunities?
Well, maybe let me talk about opportunities first. I think we've got a growing wall of loans that are maturing and a market environment that is recovering. So that's translating to a lot more demand. And we focus on the segment of the market that's in the transitional loan space, and that's lending to assets where business plans are made to improve an underlying asset value. So we see a lot more compelling opportunities in that space. Competition's always going to be there, but in this space, I think private capital is better positioned to take advantage of the opportunities there. And we look especially at the larger loan segment where 100 million and above, and where you're seeing just less competition for capital as compared to some of the smaller loan sizes.
For investors looking to diversify their portfolios, how can commercial real estate debt complement other areas of private credit and commercial real estate equity? And what should they consider when allocating?
Well, if you go back to fundamentals, like real estate as an asset class has a lower correlation and volatility profile to as compared to a lot of other asset classes, just because of its hard asset backed nature. So in adding real estate debt to private credit portfolio, we at PIMCO believe it's very complementary because that brings with its lower correlation profile. And if you were to think about debt versus equity today, for real estate, we think that debt presents a much more compelling opportunity with the fact that you're getting a lot more downside protection with your base and fixed rate as compared to the potential volatility in returns that you're going to get from equity. Notwithstanding that values have corrected, debt still presents a much more compelling opportunity today given the downside protection.
You've deployed over $23 billion US in loans into commercial real estate since 2019. How have the lessons learned shaped your approach?
I think for us at PIMCO, we like to say that great loans are made at underwriting, but great returns are made through active asset management. And we think one of the key differentiating factors of our platform is really our active asset management approach. And that has really served us well as the market has gone through a really difficult time over the last couple of years. And we've seen that active approach play a really big part in our ability to ensure recoverability in all our loans. So I would say that's been a key edge of our platform. At the heart of PIMCO is really our strong investment discipline, and I think that it is another key factor in how we look at our investments. I think we're very proud to say we've not really had any major issues across our loan book despite having gone through a really difficult time. So I think those two factors combined are really what has made our platform really successful.
Thank you so much, Alicia. We're going to need to leave it there and get back to the forum. I really appreciate you sharing your expertise with us today and for being a part of Global Investment Institute's Fixed Income and Alternative Credit Investment Forum.
Thank you. It's great to be with you.